It's no secret that the market has fallen significantly in the last couple of weeks. And with these dramatic moves in the market, we have seen volatility increase significantly in just the last 5 days, up almost 40% to a high that was achieved on Friday of 29.44. So in this video, we're going to take a look at 5 different stocks that I'm going to be keeping an eye on if the market continues to drop. If you enjoy the video, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. First up here, we have NVDA. NVDA is a stock that is up over 100% year to date. However, from their highs achieved back in June of $135, the stock has fallen over 20%. And when you talk about NVIDIA, you have to highlight their numbers. Back in 2023, they were bringing in just under $26 billion in the trailing 12 months for revenue. However, in the most recent quarter, they put up over $26 billion. And now their trailing 12-month revenue is sitting just under $80 billion. And not only have they seen top line growth, their bottom line has grown significantly as well. Back in 2023, they had a trailing 12-month EPS of 20 cents. That has since grown all the way up to $1.71 of trailing 12-month EPS. And the main reason I want to keep an eye on NVIDIA is oftentimes when stocks go through this much of a growth cycle in a very short period of time, you end up with a lot of investors that don't necessarily believe in the company long term. They could just be seeing the company moving up and the stock price going higher and jump in at any price. Eventually, if the fundamentals start to turn around and the business shows any signs of weakness, a lot of these investors will run for the door and you'll see valuation drop in a major way. And even right now, the forward P ratio for NVIDIA is sitting just under a 41, which really is not bad at all for a company that's growing as fast as they are. However, if we start to see again any sort of cracking in their fundamentals, we could see the forward P ratio drop to very, very low levels very quickly. So if we do start heading into a recession and people start pulling back on their cloud spending, especially when it comes to buying new chips, and we're talking about Microsoft, Amazon, Apple, if they all start looking to pull back on some of their spending that is going to NVIDIA, and that starts affecting some of their fundamentals, I think the stock could fall back down to the $50 range. And that could be an interesting time to start building out a position. The second stock we have up here is one that I've paid attention to for a while now and just never bought into, and that is Shopify. Shopify year to date is down over 26%, and from its 52-week high of just over $90, the stock has fallen 40%. Shopify is the go-to spot if you're trying to create an online store, and online shopping is exploding. There's so many large brands that actually use Shopify. However, you don't really associate these brands with Shopify just because they're managing the back end. They're managing how these stores bring customers in, how they actually execute orders, and things like that across the board for these very large brands. So this is a company that I think over time is going to continue to grow in a massive way. And we can see that massive growth potential in their numbers. Over the last couple of years, despite the economy being relatively weak, interest rates being high, inflation being high, they have still been able to grow their top line revenue consistently by over 20%. And prior to a lot of these issues coming into the broader economy, they were actually able to consistently grow their top line revenue by over 40%. However, profitability has been a different story for them. They have struggled to consistently achieve profitability. It's been all over the place for their EPS numbers. We saw them in 2021 bring in $2.68 of trailing 12-month GAAP EPS. However, that fell down to negative $2.73 of GAAP EPS in 2022, and now they've been able to trend back to about break even, but we really want to see these numbers start to turn around and them to show that their business model can consistently be profitable. Shopify has proven to be a very dynamic stock because back in 2021, the share price hit $169. Keep in mind, at this time, the company was showing profitability. They were looking like they were going to grow in a major way, especially with a lot of businesses converting to online because of the pandemic. However, since then, that hasn't necessarily proven out, and the share price has fallen almost 70%. It is up from its 5-year low of around $26 per share, up about 100%. However, I do think that this stock could fall a little bit further, and that would be very interesting. If it fell back into this $20 to $30 range, I definitely think that it's a buy. Next up, we have Meta, and this made the list because it suffers a lot during hard economic times. We start to see a lot of companies pull back on their advertising budgets, and this affects Meta in a major way. Right now, the stock is up 41% year to date, which is a massive move. From its 52-week high of around $540, the stock is down only 10%. In terms of Meta's top line, they saw a decrease in revenue in 2022, which was very interesting, and this worried a lot of investors and actually sent the stock price down in a major way. However, since then, they've really turned things around and focused a lot on their core business as well as staying very profitable, and they've gotten back to top line growth in the 20% range. And Meta's focus on profitability has shown through in their numbers. Their trailing 12-month EPS was $8.07 back in 2023. That has since grown all the way up to $19.56 of trailing 12-month EPS. Their growth of EPS has slowed down slightly, but it's still sitting at a year-over-year increase of 73%. Personally, I don't think Meta is going to go back sub 100 like we saw in 2022. I was buying a number of shares in 2022, really loading up on Meta, so I personally would want to see the stock price go below $200 per share for me to start looking at buying it again. I think that right now that's unrealistic. Meta has shown that they can be a profitable company and still grow their top line numbers, and I think that's something that is going to attract a lot of investors if we start seeing troubles in the broader economy. The fourth stock on this list is one that I've never actually owned, and that is Amazon. It peaked at a stock price of around $200 per share. However, since it's fallen 16% down to around $167. And Amazon's one of those companies that just continues to grow no matter what's going on in the broader economy. Their top line revenue is sitting at $590.7 billion, and it is growing year over year at 12.5%. So their growth rate isn't fantastic, but 12% is still double digits, and they could probably see this grow to 15 to 20% in the next few quarters unless we do see a major turndown in the economy. Where Amazon struggled is their EPS numbers. They actually hit a negative trailing 12-month EPS back in 2022 of negative 27 cents of EPS. That has since actually rebounded back up to $3.57 of trailing 12-month EPS, which is higher than the previous high that we saw in 2021 of $3.24 of EPS. The struggle I've always had with Amazon is around their valuation. Currently, it's actually not terrible. Their forward P ratio is a 35.97. Normally, they've traded in that 50 forward P range. So it's actually very interesting to see them drop down into the 35 range, which is more in line with where big tech is trading at. But ideally, I like picking up companies below a 20 forward P ratio. That's where I feel like there's a lot of meat left on the bone for them to expand their valuation while also growing their EPS. And stock number 5 on this list is Palantir, which is up almost 50% year to date. However, in the last couple of days, it's dropped 14%. I've made a number of videos on Palantir, so you could check those out to see kind of what's going on with the company. But the main thing to highlight here is that they have been able to prove profitability over the last few quarters and staying consistently profitable. And I'm very interested in where this company could be going in the future, because they could really prove out the concept of AI and how applicable it can actually be to businesses. It'll be very interesting to see what happens if we do see a weakening economy, because Palantir has done a good job of growing out their government contracts. However, they have not yet fully established themselves in the commercial space. So it'll be interesting to see how that could develop if we do see weakness in the broader economy. But for me personally, if I were going to buy more shares, I think it would have to be under that $15 mark. I bought some shares a couple years ago and it was around $8 to $9. So since then, it's ran up in a major way. And for me to really add shares, I think we'd have to see it around that $15 mark. So those are 5 stocks that I'm watching very closely, especially if the market drops in a major way. Some honorable mentions are Google, Ulta Beauty, Celsius. These are companies that I'd love to pick up as well. Ulta Beauty and Celsius are a little bit lower on my list. I don't know Ulta Beauty's business model super well, but I do know that they have consistently been able to grow. Celsius is another one that's comparable to Monster, and Monster has had an amazing stock and done a very good job of growing their business. Google's a company that just no matter what, I don't see that going anywhere anytime soon. And if we see it drop in a substantial way, I think it's a great time to pick up shares. But keep in mind, don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what's more unbelievable than a talking dog? Check the comments down below for the answer. Thanks for watching.